Hello and welcome to today's virtual arena. In today's episode, we're going to be talking all about building for the future, answering questions about how financial institutions can scale up, what they should be wary of, and much, much more. And for all of that, I'm joined by a very special guest from N26, Mr. Alex Waver. Alex, how are you doing today?
Hey, I'm very good. Thank you. Thank you, Bobby.
Alex, just for any of our audience who might be unaware, could you tell us a few details about N26, but specifically your role within the company?
Yeah. So N26 is on a mission to build a bank the world loves to use. And why we do that is to really change people's relationship with money for the better. Banks play a hugely important role in people's relationship with their money. And so sort of our mission to build a bank the world loves should ultimately have that purpose and have that sort of positive benefit on people's relationship with money, which we believe is very, very important. We are one of the leading digital and neobanks in Europe with more than 7 million customers across 24 markets. We've raised 1.8 billion in venture capital to date with a valuation of roughly 9 billion. My role as Chief Growth Officer is overseeing all of our marketing and internationalization efforts. And I've actually been with the business from day one, so have seen sort of all the development, all the scale, and very happy today to talk to you about it.
Wonderful. Let's get right into it then. You sort of touched on it already with my first question, but we're talking about building for the future, so it feels right to ask, how is N26 going about this, and where does N26 want to reach in the next few years? And without giving all of your secrets away, how do you think you can get there?
So it's a huge market opportunity that is out there in banking. I think around the world. I mean, banking is something that almost touches every person to some extent. A bank account is in many markets really a commodity that is something that enables you to live your life, enables you to engage in experiences, and so I think banking is very, very important and is important for almost everyone. That is why us really focusing on how to make that better and how to thereby improve people's relationship with money is a big undertaking. And I think our focus here, especially to address your question directly, is very much in the next years on how do we take that next step in our core European markets to really capture more of that market share and really help and deliver even more on the product side towards what our customers are asking for and looking for, a bit beyond that beautifully simple current account that we have today, cards, payments, everything that you need. Also looking to offer customers the opportunity to make more out of their money, from savings to investments. So lots of things our customers are asking for, lots of things that also are changing the European landscape in the context of the last couple of years, with COVID, with interest rates, with so on, which we can all dive into. But maybe to conclude here for now, it's really going deeper in our core markets here in Europe and deepening also the product portfolio that we offer to our customers.
Sounds like a very exciting venture and a very big challenge as well. But building for the future, it's not an easy task. And when thinking of expanding into a different area or region, I almost feel that there must be a golden period that categorizes when to do so. What do you think a fintech organization must have ticked off in its home market before it even thinks about scaling up?
Yeah, I think there's probably a couple of truths or a couple of things to look out for, even beyond fintech. I would say generally when you scale probably or build or scale a tech business, probably any consumer-facing business, there's probably a few things that you really need to make sure you have under control in your home market. That could be geographically speaking, that could even be customer segmentation driven, right? Like if a B2C company wants to go B2B as well, what needs to be true on the B2C side, or if you want to expand. So it's not I think only geographical. I think that is in the fintech space particularly relevant. So we'll touch on that in much more detail. But I think that overarchingly, you need to really have strong product market fit in your home market, which I think characterizes through a few metrics that I think are very important, typically probably in Series A, Series B kind of stage ventures, which is typically a phase where afterwards scale and internationalization and expanding to broader segments is the focus. So how do you understand if you have product market fit? I think there is a general level of engagement with your product that you're looking at. So how do customers retain? How frequently do they use your products once you have acquired them? I think that is a hugely important indicator if you have product market fit. And I would always recommend not to scale a business that doesn't have product market fit yet, because if you don't have the retention, if you don't have the engagement, you will only be, it's like a leaky bucket almost, right? And so then spending dollars on growing the top line, if you have a leaky bucket, that is not advisable. So I think for me, it always starts with having that strong levels of engagement and retention that I would really make sure that is there in the home market or in the home segment. On top of that, a certain level of organic growth is also very important. So usually you have happy and engaged customers. They also talk good about you, and therefore there's a general also level of interest and demand that is coming up. And those are things I think that should be in place before thinking about growth, thinking about scale, thinking about internationalization. In fintech particularly, maybe to go deeper there, I think if you're preparing yourself for internationalization specifically, and I will stick maybe with the European example for now, where there is a certain level of harmonization across the regulatory landscape, but there are certain elements within fintech and within banking and payments that still, just based on the legacy of the industry, are local. So there, I would say, a few components where you need to, also from an infrastructure perspective, have a modular approach in place that you're actually able to cater to those differences in the local market. So I think that would be, in addition to traction in the home market, something that is important to tick off before adding more markets or different customer groups.
Yeah, I think with my next question as well, we might have touched on it with that point on infrastructure, because with these changes and when organizations want to scale up, what do they need to do to ensure they're future-proof? Is it merely a transition to cloud-based technology and focusing on digital innovation, or are there some more cultural changes that need to be implemented as well?
I think it's a mix. I think that you need to be quite clear on your strategy, sort of how deep do you want to go in the respective markets? Is your strategy to be in many markets but not be very deep? Do you want to be in 5 markets but very deep? I think those will have different infrastructure choices. Those will have different governance choices. I think that is an important consideration. When I say governance, I mean sort of also decision making on how local do you go? How strong are your central functions? Do you shift decision making? So I think those are important considerations that ideally you have a point of view on before you start internationalizing, because that at the end also determines culture to some extent. If you have very, very strong decentralized units that sort of really go deep in the local markets, have a lot of decision making there, it's going to be a different company, a different culture than if you have a very, very centralized operation, for example, with strong functional responsibility. And so I think governance and culture, they sort of go hand in hand, and infrastructure also follows strategy. So it's I think those are the important sort of puzzle pieces that you need to put on the table and really think through before making those decisions.
Yeah, there's lots of things to think about, I'm sure, and lots of challenges that come. Would you say there's one specific challenge that would rank as being like the biggest one, or is it just lots of different combinations depending on the type of organization you are?
Yeah, I mean, so for fintech as a whole, I think it would be hard to generalize. I can maybe from my experience at N26 mainly talk about the banking landscape, where I think from my perspective there's so banking, I think from a legacy perspective, has so many edge cases if you're dealing with B2C customers, because there's just so many different groups of customers and use cases and exceptions and things that you need to take care of then by market, that that at the end makes it a very, very important consideration. How ready are you for that one? So how well have you thought about the customers you're serving, how many you're serving? I think that those are sort of decisive factors, especially on the banking side. back to what we said before on infrastructure and governance, that is sort of, how do you set up your back office, your customer service, your fraud prevention units, how central versus local are they, how what is the expertise you're getting ready for. I think that is sort of super important on the banking side. Not sure how different that would be across the different fintech verticals, but I think that is probably one of the key things to think about, if you roll out banking across multiple markets.
Yeah, already I feel like we've covered so much in such a short time, which is funny because finance, naturally being like one of the most regulated industries in the world, in my opinion, doesn't lend itself to rapid expansion. It's obvious that we're dealing with money, which is people's livelihoods, their ability to provide and such. The stakes are high, and regulation will always be a massive component of that industry. So how can fintech companies become compliant in new countries at rapid speeds?
Yeah, I think there's maybe two ways to look at it. One is really the governance framework and the regulatory framework. So what is actually the if you think about two different countries and you want to understand how can a company be compliant in both, you need to understand what is the overlap in terms of the regulations. So do you, for example, is there even between the two countries the ability to serve both of them with the same license, right? So I think in our industry, Europe is the only area in the world where with one license you can serve more than one market, right? So there is no place around the world, not US and Canada, not Australia and New Zealand, not no countries where you actually have that same setup where you say there is one license that allows you to serve both markets, and that is just the starting point. So even zooming back into Europe, so here you can actually with one banking license operate across borders. You can operate across the EEA, but still there are then other regulations locally that still are there, as mentioned from a legacy perspective, that then are different by market, even though they're based on similar sort of regulatory guidelines. For example, they're still implemented differently than by market. So then there are certain areas within that industry and within that space that are different by market. And so in order to become compliant across markets, you need to understand which areas of your business are those ones that are different by market. And then back to the infrastructure question, how can you prepare a modular perspective there in order to tailor to those different needs by market? So I think that it really is an understanding of how different are the regulations by market, and based on those differences, are you flexible enough to deliver an experience that can be two different experiences, for example, in those markets, in order to meet the different compliance requirements. So I think that is the important consideration. And I think around the world, we still have a huge way to go in order to reach any level of harmonization, which I think is a good vision to have. And I would love to see more harmonization like we have in Europe also taking place around the world, in order to really allow also more harmonization, more truly global players in the industry. I think that is one where a lot of sort of collaboration with different areas around the world would be really necessary to enable new business models as well.
It would revolutionize the landscape completely, having almost all of those borders removed and the ease and frictionless environment. That would be very interesting to see. Moving on then, we're seeing neobanks increasingly looking to associate themselves with a particular cause, whether it's ESG, whether it's focusing on the aspiring affluent individual. Would you say it's critical to have a mission as a neobank in order to be competitive and successful?
I think any business really needs a mission to be successful. That sort of is my deep belief that if you're in the business not for any kind of bigger purpose or following a mission, you will have subpar outcomes in the long term. You will not have the best employees work for you. You won't have just generally that North Star that aligns. So I think that is something I strongly believe in, and that's broader than neobanking. I think the point you mentioned on associating with certain causes, for example, is, I would say it's important at a certain stage of the business. I think what is important at the get-go, obviously, is to be clear on what you stand for. It is important to build a sustainable business model, and it's important to solve the problem that customers have. So, for example, if the main pain point customers have with banking is that it's just a very, very painful experience, not flexible, intransparent, very hard to understand. So the primary problem you're solving is that one. And if you're able to do that and scale a sustainable business model, then you can, I think, take on also sort of really think about what are causes in society beyond the core you're solving with your product that you care about, and how do you integrate that into your business model. I think that is definitely a very, very good way forward. I think that it's a sequence though, and I don't think that if you haven't figured out the business model, if you're not really solving the core problem that customers would have in your category, that associating to a cause before you have those figured out and hoping that it solves sort of the other pieces is not going to work out. That's my point of view.
Yeah, you need those root fundamentals before anything else can branch off. Otherwise, where are we going? You need some purpose and some guidance in that instance. And lastly then, what trends do you think will dominate the banking and fintech space in the future? Will we see maybe the mainstreaming of crypto within traditional financial services, or are there other examples that you think might take off instead?
Yeah, super good question. I mean, I think probably, for us, we already take digitization for granted. We say that that's already done and dusted, and what's next? I think that is true in terms of what are the early adopters thinking, what is the next big thing going to be. I still observe, on a broader level, if you think about, general population, there's still a lot of adoption to do towards digital, towards mobile, towards the smartphone when it comes to banking and payments even, right? So basic infrastructure, if you look at how many people are really banking with a neobank today, even though there's been massive growth in the last years, also accelerated by the pandemic, it is still, I think, single digit if you think about the total population. And so personally, I still think that there is, very, very big movement and adoption in that space, more in also the mainstream audience to happen in the years to come. While at the same time, I think on the more innovative front, let's say, or I mean, on the front more, what's next for the early adopters? What's at the front of the innovation curve? I mean, it's hard to say. Trends come and go. It's interesting to think about what's here to stay. I think that the whole payment space is definitely still evolving quite a bit. So I think that how do you remove even more friction from payments, while at the same time, how do you really increase that level of security and drive down sort of fraud volumes in payments? I think that is sort of a very, very interesting space where I think that with biometrics, with wearables, with mobile payments, with all the different things that are coming up, I think that is the space that's also so relevant for everyone in the everyday, e-commerce going up and the like. So that balance of friction to prevent fraud, but also then the convenience that just people are asking for, I think that is sort of a space where I see a lot of things moving, and where I think that is also super interesting from a consumer perspective, as it's just so relevant in the day-to-day. So that's maybe one I would like to emphasize, that's more maybe relevant for everyone, that I think a lot of things are happening there.
I like that focus back on the general population as well, because like you said, like we're at the forefront, and so often it feels like everybody's involved in that bubble, and it's very easy to forget that there is still more work to be done as we go on. Well, Alex, thank you so much for your time and your insights. Just before we go, is there anything else you'd like to share with our audience that we should keep an eye out for with N26?
I mean, as mentioned in the introduction, very, very much looking forward to expanding our product offering. I think there was also very, very interesting smaller, so to say, feature that we launched last week, which is cards for spaces. So that's one of the things our customers requested the most. The spaces are our way to budget and divide your money, and you can invite friends to a space. You can then allocate cards to a space. So that flexibility, that freedom, basically, that we want to give our customers to really bank their way, to really be flexible in how they think about their money, is one of many things that's coming in that direction. So I think that's just something, if you look for that freedom, that flexibility, that user experience, there's many things coming. So that's what I'm particularly excited about. In addition to the making more out of your money with the savings and the investment side. So I think those are the two spaces I would encourage everyone to keep an eye out. But what's cooking is exciting.
We can't wait to see it unfold as well. Well, to all of our viewers back home, we hope you enjoyed today's VA. I've been your host, Bobby Seaman, and we'll see you in the next one.
Thank you.